Get on board, get on track, get to where you're going. And now, your EduTrainer, national insurance columnist, Steve Savant.
Well, welcome everyone. I'm Steve Savant, your EduTrainer and coach through our entry-level series on life insurance. Perhaps you're coming from another industry, maybe annuities, maybe property casualty, medical, securities, banking, and you're saying, I'm coming into life insurance because I think that's another possibility to build out my practice. This is excellent. Our edutainment workshops are brought to you by our sponsor, Lincoln Benefit Life, an Allstate company, and we're using their software for one reason and one reason only. It is the most user-friendly software, and in the days to come, you'll want to have this software already loaded onto your machine. So all you have to do is go out to their website, www.lblsales.com/ETW. That's www.lblsales.com/ETW. Just hit the run installer, install the software down, and then when we get into proposals, you'll be able to go page by page with me, which we feel is we recommend it because it's a great learning, it's interactive learning, and you'll learn the concepts of illustrations, and there's a lot of meat inside that illustration, a lot of statistics and numbers and different ideas for strategies, and you'll want to do that. Also, we're giving away our life manual with a full vocabulary. This thing's really big, and I think you'll like it. It's got a table of contents. You can order it absolutely free at thebiz@brokersalliance.com. That's thebiz@brokersalliance.com. I just recommend that you get it so that when you're watching our shows, our workshops, you can go through and say, oh, that page, I know where that page is, and you can look at it and read it. We're teaching this, but it's only in a 15-minute platform. When you actually have it in front of you, it really helps. Well, today we're talking a little bit about companies' ratings and the difference between claims paying ability and financial strength. Because remember, if I'm going to have a life insurance policy, it's only as good as the carrier behind it. So I want to make sure, does my carrier have the wherewithal, the financial strength, the claims paying ability to pay the claim when I want it? So let's just go to our board and I'll walk you through some kind of entry level. I think you'll appreciate it. And here's a script. Again, this is all in your life manual. It breaks out some of the services. So this is AM Best, Standard & Poor's, Moody's, Fitch, and the Street.com ratings. There are also the Comdex ratings, which we'll get into in a little bit. We have another sheet for that. And I just want to walk you through some of the ratings. Are all ratings created equal? Well, AM Best has basically been the industry vanguard for years. I mean, easily 50, 60 years. AM Best rates claims paying ability. And you'll notice that their interpretation of their top two ratings, A++ and A+, signifies that they believe they have superior strength and their very strong ability to meet any of the obligations that they have. Even a step down uses what I would call very powerful and positive language. A to A-, excellent, strong ability to meet obligations. It's interesting to note that some people feel like, hey, once you get past those 4 levels of AM Best, that's when you get into things that are problematic. But the language that they attach to a B++ or a B+ carrier, it still is good ability to meet obligations. It's when you get down to B and B-, it says fair. So what 90% of the market that's sold in the United States today is still dominantly A- and above. Because most clients want the comfort that if they're going to buy from an insurance contract, they don't want to be hassling the issue of does the insurance company going to be around, is it going to be solvent to pay those claims. Standard & Poor's not only is the vanguard, one of the vanguards for life insurance, but as you know, they've been one of the biggest vanguards on investments. They rate companies, countries. I mean, they're just huge. S&P ratings are not dealing with claims paying ability. They're really dealing with financial strength. Now, when I look at this, AAA rated, because of what's going on in our economy now, and because most huge companies are invested in government bonds, there are no longer any AAA rated S&P companies as far as life insurance companies in the United States. Hard to believe that, but that's just the way the economy has been. Then when you move down the list, there are 3 rankings. They're AA+, they're AA, and they're AA-. Very strong financial security. And as you can see, these listed all the way down. Moody's, which generally everybody thinks about Moody's as being a player in the bond market. Let's see if I can get that, go to the other. There we go. And then Fitch is kind of a new player in the big scene of things. They're looking at the same kind of financial stability and the ability for the carrier. So when you think about it, we have TheStreet.com, we have Fitch, we have Moody's, we have S&P, we have AM Best, we have the Comdex rating. I mean, there's a lot of great services, surveillance services that are monitoring the strength. And every month we look at the watch list, which is published, and we keep our agents and producers aware of that, because we want to know, hey, how are the companies? Are they getting an upgrade? Are they getting a downgrade? Have they all of a sudden appeared on the watch list? We track that, and we track that every 30 days. And then let me show you something here that I think is a great comparison. I've taken, Weiss too, we are adding another one on this one. So we add them as well. Look at this when you come in, and maybe they can come in a little closer on the camera shot. You'll notice that we're comparing. So I noticed the other day that a person told me that the AM Best was A+, but the S&P was A+. And they were equating that an A+ AM Best is at the same level as an A+ with S&P. Well, as you can clearly see, the A+ with S&P is 4 levels down versus the AM Best A+ at the second level down. So remember, I saw the other day an A-rated carrier comparing himself to the Fitch A compared to the S&P A compared to the A Weiss. They're not at the same level, as you can clearly see. And they go all the way down to 19, or actually 20 now, different categories, all the way down with S&P and Moody's and Fitch. So it's interesting to note, I like to keep this close to my desk, because when I hear a couple ratings and they give it to me in a nice format on a single page, I just want to know, hey, is this all equal? Because it isn't. And so I want to be able to make kind of a quantitative judgment, and the more carriers I can look at, the more surveillance I'm having, the better, more ratings I can kind of give an idea to my client. And again, adding on another one like Comdex rating, another numerical weight, just adds to my ability to measure it. All of us are probably not accountants, but even though we're not, there's some balance sheet issues that I want you to look at that are pretty easy to understand, and believe it or not, we have actual vocabulary for this. So you don't have to say, wow, I don't know anything about these kind of carriers, these kind of numbers, I don't know balance sheet, I'm not an accountant, doesn't matter. These are now distilled. This is the summary statement put out by Vital Signs, an EBIX company. Vital Signs takes the Comdex rating, notice I alluded to that, and it has 4 ratings that they look at, and notice they actually put the levels, the very thing I alluded to, so that you can see it. And of course I'm looking at our sponsor right now, Allstate Life Insurance and Lincoln Benefit Life. And when I look at this, I want to be able to go through the balance sheet and kind of see how they're doing, see what they're doing, what their numbers are like, and to see what kind of commitments they have in their invested assets, what kind of surplus and evaluation reserves. All these titles here, we have a complete vocabulary for. So if you say, I can't remember what total admitted assets means. Well, you could look that up in the vocabulary, and when you're doing that, you can match up what's the definition of each of these. Remember, I'm using EBIX's Vital Signs. Interesting about this is the summary statement taken by the carrier's state filings, euphemistically called the convention blank, believe it or not. It's huge. Some of these the conventions are like this big. They look like you open it up and it's bigger than your home family Bible. It's huge. So when I look at this and I say, I need to say, what's the summary? I don't want to go down to the state and copy everybody's file when they've done this for us and they've mapped out what I need to know. So when I'm going through this, I look at the ratings and then I look at their levels. And in this case, interesting to note, and this is a good note for Lincoln Benefit. Lincoln Benefit is a subsidiary of Allstate. Allstate is obligated to Lincoln Benefit as their parent company. Not all companies that are parent companies to other carriers actually have an obligation. They may own the majority stock, which I can't see them ever having a problem by cutting their subsidiary loose. But at the same time, this arrangement is really strong because the parent company actually backs up all the obligations of Lincoln Benefit. Both companies have been around forever, and of course everybody knows Allstate, the good hands people. Now, when I'm looking at this, I'm looking at total assets that they have, and I'm looking at their net worth, kind of like what's their total surplus and their asset valuation reserve, AVR. And again, if I didn't know what AVR meant, I have a vocabulary for that. And then I can look at their total bond positions. And I want to know, I wonder how their bonds are. Well, I can go here and say, look at this. They have very little, look at this, very little in non-investment grade. That's class 1 and 2 bonds. So when you think about that, you're looking at very, very, very clean balance sheet. And then I can look at the quality of bonds by duration, what kind of return they're giving, their maturity, how long is it going to go. And then this breaks down. Look at this, class 1 and 2, which is investment grade. They have 90% plus, and LBL, even the more, has that in investment grade bonds. So you're looking at U.S. government, most of it is debenture by the United States government issue. And then you can look at their maturity dates on when these bonds come out and see what kind of medium to long positions that Lincoln holds. Here's another thing. I can look at operational income analysis. Hey, did they make money? Are they cash flowing? How about their earnings before taxes? I can look at their 2010, and this is their 2010 and 2011. I can look at their 1-year growth and their 3-year growth. I could look at ordinary income. I could look at profitability. All these things are in there. I can look at their actual growth, and here's another area. I can look at the analysis of the face amount. So their total in force, $306 billion, which is huge. And look at their subsidiary. They have huge amounts themselves at $364 billion. When I look at these numbers, I can see, look what they're ceding out to reinsurance, because they can't hold the complete obligation within Allstate, so they partner with reinsurance treaties and look at the reinsurance that's going outside. So about a third of everything that they try to cover, at least according to the balance sheet, is going to one of their partners. It will walk me through all the issues that I want to see and the balance sheet items, and I want to know that because, again, my company is only as strong, right? My contract's only as strong as the company behind it. And I always want to make sure I have somebody that has not only the ratings, which again, it's a really good idea to just go off this, but sometimes I like to look at the balance to look for anomalies, looking for something that, hey, kind of sticks out like a sore thumb. Notice, interestingly enough, that the bond position is almost 79%. Very little in stocks. But we do have a little bit of holdings in mortgages, 11.5%. And when I look at that, I look at how are they doing in all their overall treatment and their permanent policies. They've hardly any of their clients, looks like they haven't tapped hardly any of the policy loans, so it's under 2%. That's a huge thing to look at when I'm walking down this. And look at the earnings. Can they credit more than they're earning? This tells me what they're earning, and it kind of gives me a way to measure, is the illustration, whatever their current company assumption is it close? Is it reasonable based on their balance sheet items that are in the summary sheet taken off the convention blank that every carrier has to file in their state? I like this because even if I don't understand all the accounting procedures and all that this means, we have an attached vocabulary that they built out of Park City, Utah when they first built this before Ibex bought them. And Vital Signs has really been good about good vocabulary, not high-end MBA, CPA vocabulary, but easy to understand so that you can walk through this. And that's what I do. I just look through it here and say, how are they doing on their earnings? How are they doing on their investment returns? I look at their asset managed growth, what their 1 year is, what their 3 year is, and is their net worth growing? Is it shrinking? All of this is on the summary page that I can read that has these ratings. Does it matter? I think it really matters. For the contract to have viability, for your client to sleep at night and your practice as well, you'll want to choose carriers and companies based on their ratings, their balance sheets, and be able to compare between the 2 or 3 to 4 to 5, 6 different rating services. That's in our manual, All in Life Insurance Manual.
This has been an Edutrainment Workshop, the educational division of the National Insurance Clearinghouse, the marketing arm of Brokers Alliance, and sponsored by Lincoln Benefit Life, an Allstate company.